Hello guys, welcome to the new episode of price action breakdown. In this video we will be continuing with our discussion on price action breakdown. Before I continue, let's discuss what we have studied earlier. Earlier we had studied that when demand is greater than supply, price goes up. When demand is less than supply, price goes down. And when they are in line, price is equal to supply is equal to demand. Price won't move in any direction. It will accumulate or consolidate, making fair value of price. After that we have read about some of the characteristics of fair value area is: fair value area has most trades. Repetitive up and down move in the same price area creates fair value area. Fair value area affects future price action. Like its boundaries act as support and resistance for further price action. Like we can see here, the top boundary acts as support when price penetrated the top area. Again we have the excess price. So excess price is the price at which it has traded very less time and has been rejected quite swiftly. So now continuing it. So next topic is control price. So let's see what is written. Price starts rotating up and down at certain levels. Control price is the price level inside the fair value area where it has highest trading activity and volume. It acts as a gravity and exerting gravitational pull on all price inside the value area. So let's study it on notepad. So this is the third time I am recording this video. Actually what happened, this time has got a low RAM, and so when I open multiple applications at once, the recording gets stopped, and so I had to, like, every time I have to minimize, I have to close the application, clearing the RAM. Anyways, so what we had studied here, price goes up. Why it is going up? Because demand is greater than supply, and so price goes up. And here, why it is coming down? Because supply is greater than demand. It is coming down because supply is greater than demand. Sellers are selling more aggressively than the buyers are buying. Now let's focus on this zone. This rectangular area is called fair value area. Price has traded most of the time here. It has went up and down, rotating inside a small area. This happens mainly because here demand is in line with supply, and none of them is greater than the other one. So what happens is that when price goes a little bit up, sellers find that the price is too high, and so they start selling it. And at the same time buyers feel that price is the instrument has went expensive, and so they are not buying it. So what happens is that sellers are selling but buyers are not buying. This creates a demand mismatch. Sellers outnumber buyers, and so price came down. So when it comes down to this level, lower level, here sellers are not willing to sell because they think that price is too low, too cheap for them to sell. On the other hand, buyers find the price cheaper to buy, and so they are buying it. So overall buyers are buying but sellers are not selling. This creates a demand mismatch. Demand exceeds supply, and so price goes up. This happens repeatedly, and so this creates a zone of price movement, which is called as fair value of price. Fair value means that the instrument is fairly priced, neither too high nor too low. Now coming back to excess price. So we can see that instrument was trading inside a zone, and it went up significantly. What happens now? Sellers were comfortable selling at this point, but now price is at higher level. They find it they are getting more price to sell. They are selling it expensive. It is good for them. So they come in huge numbers and start selling at higher price, and so price comes way back down quite swiftly inside the area. Same way, when the price goes below fair value area, buyers were buying at this level, and when instrument has reached at this price, buyers are finding it way cheaper, and so they are buying more aggressively. This creates a demand mismatch, huge mismatch, and so price is swiftly thrown back inside fair value area. So this was yesterday's topic. We did revision. Now coming to control price. So control price is a zone inside a price line inside a fair value area where price has traded most of the time, and it acts as a magnet attracting price. One thing to notice about control price is that it has not to be it need not to be inside the midway of midpoint of fair value area. It can be slightly up, slightly down, depending on the situation. So we can see price went up, it came down, and while it was going up, the this control price offered a resistance, and so price came down again. It again buyers bought aggressively and pushed price to the top area where sellers outnumber, and it came down. While coming down, we can see that it faced resistance. It act the control price acted as a support for the down price, and so it in this and it went up. So this was about fair value. It was about control price. Now let's discuss about the next topic. What is next topic? Next topic was initiative and responsive trading. So there are two types of trading: initiative and responsive trading. Initiative trading is that when a group of people feel that the instrument is not correctly priced, and so they take the initiative and move the price of instrument away from fair value area. The responsive trading is the counterpart of initiative trading. When initiative traders take the initiative to move price away from value, the responsive traders, what they will do, they will they will take position in the opposite direction and try to move price inside the fair value area. So we can see here is that we can see here we had fair value area. The sellers now find that this price instrument is not evenly fairly priced. They think that it is quite expensive, so they start selling in greater quantity, which brings price back down. So this is called initiative move taken by the sellers. Counterpart to it, buyers start buying. However, buyers are not buying aggressively, and so price stalls here for a quite period of time. If towards the end, it reaches the lower boundary of fair value area where it faces resistance, and price is swiftly brought down. So here we can see that initiative move was quite stronger than the responsive move, so price moved in the direction of initiative move. So let's discuss all the points we studied on the chart. So we will be looking at XA USD chart, hourly chart. This is gold chart on hourly basis. I have we can see on the hourly chart we can see that there is a fair value area zone. I have I have drawn a rectangle around it. Uh, so okay, what happened? Okay, so this was the area. Okay, so price was trading inside this. Here we can see it came down and it was quickly rejected. This is the excess price, and here the it is now buyers are thinking that this price is quite cheap. Price is not fair. They find it cheap, and so they buy aggressively. This is called initiative move. And in response to the initiative move, sellers found it expensive, and so they start selling. They brought the price inside fair value area. So here we can see that initiative responsive move is in line with initiative move, and so this one will not be called as initiative move. It will responsive move. It will also be called as initiative move itself. Again, instrument traded inside the fair value area. Now this one we can see that here they have taken the initiative to move price away from fair value area, this line, whereas the response to that, sellers have not come in huge number to sell, and so price has not come inside the fair value area this time. Okay, let's see any other let me zoom out, then it will be clear. Yeah, so here we were sure about initiative and responsive move. Now let's look at another fair value zone. Yeah, this one. Here what is happening is that price is trading inside a zone. These are the access areas. Here buyers and this was the zone price was trading. Here buyers took the initiative and pushed price up. This was called initiative move. Sellers started selling and they moved price inside the zone. So this will not be called as responsive move to this trading. This itself is an initiative move by the sellers. Again, let's look at this one. This one is the initiative move by sellers to push price away from fair value area. In response to that buyers have not participated aggressively, and so this will be called as responsive move. So that was all for this video. We will continue with the next topic. Thank you guys for watching this video. Have a nice day.